Hi everyone, Linda Baker at the Long Pinell Realtors. Well, there's a cool in the air, the colors and the trees are changing, and the real estate market is definitely taking a bit of a breather in the fall of 2018. Let's talk numbers. Active listings are up over 100%, 130% over last year. That's deceptive. I don't want to alarm you because last year was incredibly low, lower than we've seen it in almost my entire career. But if you go back 2 years ago, we're about 20% up. So really not too bad. Prices, though, are flat compared to last year. Average selling price in Santa Clara County is flat year over year. First time I've said that in a very long time. But go back 2 years ago, we're still up 10% over 2 years ago, or actually 11%. So we're still holding our own. Now, does this mean that it's a one-time market trend? Well, we've been seeing a bit of a cool off month over month over the past few months, but I think part of that is because we've seen some news reports, and I've been saying this for months myself, that how long can we have increasing real estate prices when our own personal incomes and paychecks are not going up at 10 to 20%. So at some point in time, it had to slow down. But what's interesting is that the single family markets, which is what I'm talking about right now, the average sales price to list price ratio is about 101%. So just right about list price. But the condos are seeing about 104% sales price to list price ratio. So you're seeing still a greater appreciation in the condo market, more higher prices for that market. And I think part of that is because the prices are lower. So the prices are lower, people feel more comfortable in going over. But when you're reaching about $1.5 million for an average sales price, to go up 10%, it's $150,000. But you know that, don't you? But what does this mean to you as a buyer? As a buyer, there's more selection. Interest rates are still good, though they're starting to creep up. We just saw a Fed rate increase last week, so we definitely need to make sure that you're taking that into account. And personally, I wouldn't dawdle because the cost of ownership, you have to factor in how much your loan's going to cost you. And if you have, an 80% loan to the purchase of the property, then that extra increase, if it goes up more next year, is going to hurt you more than a little bit more of a higher price. As a seller, you need to temper your expectation. You need to be aware of what's happening in the market, to listen to us because we do know what we're talking about. I've been really fortunate that my last two sellers listened to me very well, and my last two sales have both sold with multiple offers over the asking price. So there you go. It can definitely happen, but you've got to present properly, you've got to price it properly, and you've got to present it to the market. It's all, pricing, presentation, all these things are so critical for you to make sure that we're selling your house for the highest possible price. So it's not all doom and gloom. I think this is a great opportunity for people out there who bought their homes a few years ago and their money and their equity is in their home, and then they were stuck because in a seller's market, you can't do a contingent offer. You can't say, well, wait till I sell my house. Now we can do that. And so I was doing that 2 years ago in 2016 for several clients of mine, and we can do it again today. So let's talk. It's time to think about whether you're going to be doing it now or in the new year, how we're going to be looking at getting you to where you want to be. Whether you're a buyer or a seller, there is opportunity in this market. So believe me, my glass is always half full. Anyway, Matt and I look forward to helping you out in your real estate transactions, and we are never too busy for your referrals. Take care, and we'll see you next month. Bye-bye.